Hello, hello everyone. Hello. Thank you for coming to our monthly membership engagement meeting. And yeah, tell me, as always, tell me where you are. I love to see your name again, your names again. I already say Jack, and I know he's from Canada, I think. And yeah, and I'm based in Plano, Texas, and let me know where you are. And I love to see familiar names. And but as always, feel free to ask me questions, any questions, no matter you're a new member or a long-term member. We do have lots of long-term members. Thank you all for coming. And I see some familiar names and some new names. That's really exciting. Thank you for coming. If you're first time here, and our members are from all over the world. And see, I see someone from Ukraine. Oh, I believe I saw you before. Thank you for coming. Thank you really for coming. And Yanli, hey Yanli, hope you're well from Poland and Spain. Okay, great. That's really great. And yes, now we're December, and we have less months for the year, and the market has been good for the last 3 years. So how do we think about the market? How do I think about the market? And let me share my screen with you, and you can see that uh, what I'm looking at and what I observe. And feel free, as always, to ask me any question, to share your thoughts in the chatting area, and I will comment when I get to it when I get the chance. Yeah, thank you for coming. Uh, yeah, as market has had a great 3 year run, and we're now December. So I want to check where the market is. As always, the market valuation. And if you come to our market manual here, have lots of things. There's market valuation part. There's global market valuation. There's also economic indicators, all these economic indicators, and also sectors and industry performances. And of course, let's come to Buffett indicator. Buffett indicator, if you're not familiar with it, Buffett indicator measures the ratio of the market cap over GDP, and currently the ratio is up 224%. That's the highest in the last 20 years, and the highest ever. So we have not observed this high of Buffett indicator ever, even during the dot-com bubble in 2000. Now we're at about 224%. If we measure by this, market valuation is really high, very high, and the future returns will be low. And yeah, future returns will be low. But last few years, the market return has been higher than what's predicted by the Buffett indicator. Let's look at another indicator here, Shiller P, which is created by Professor Robert Shiller. Our Shiller P is now close to 40, and it's only lower than it was during the dot-com bubble. And again, market is very overvalued as measured by the Shiller PE. And GuruFocus created a GF value for SP 500 companies. Yeah, again, it's also overvalued. Yeah, at this kind of market condition, where can we find better valued stocks? So we look at the Shiller P by sectors. Shiller P by sectors. If you look at here, and if you look at the Shiller P for different sectors, it seems like the financial service and energy, basic materials are the sectors that are most undervalued at this point. The technology stocks, which had great rise over the last 3 years, are very much overvalued as measured by Shiller P of those individual stocks. If you want to know which stocks are included in each of the sector, just click on the numbers and it will show you where which stocks we are considering included in the different sectors of these indicators. Okay, it seems like we already have lots of questions. Let me take a look at the questions. Hello, John from Colorado. Yeah, 6 inches of snows. Wow, must be good time for snow. Maybe for skiing, maybe. Brainstorm is asking, why don't we add TAM indicator? Company estimate 4 trillion, estimate 10 growth. Yeah, please, for this suggestion, please open a ticket and we'll certainly consider it. And okay, you're talking about CHD. Yeah, let's take a look. CHD, it used to be a very steady outperforming stock, but it has been underperforming this year, this year dramatically, quite dramatically. And I think the reason, if you want to know the reason, actually look at the transcripts. And the transcripts, we have good summaries here. I think in case of search and divide course market, the sector is out of favor. If you think the sector is out of favor, consumer defensive, they're out of favor. The market favorite sectors this year is technology, and CHD. It's not growing as fast. Certainly, it's not growing that much. Growing very fast, and also the high inflation and consumers are. Consumers have less money. I would say the affordability is becoming more of an issue with the inflation, so it certainly affects CHD in this case. But if you look at the valuation is certainly at the very low end of the historical valuation, and we think it's undervalued at this point. Okay, why doesn't GuruFocus use special meters access banks? Yeah, all these ratios we love to have, but they're not always available. We're actually working with some AI tools to try to get this data, and we're getting some of them. And when we're ready, we'll add them in. That's lots of questions from Brainstorm. Why market is punishing SPSC? Not sure. I'm not sure about this company. I'm not familiar with it. Why it's what does it? Let's take a look. What does it do? It's cloud-based supply chain management service for retailers. Okay, distributors, suppliers, and okay, it's well. I will say the company looks quite strong, financially strong. The profitability is good. The growth is pretty good. Sometimes you just need to be patient. Sometimes, actually, most of the times. This year it has been doing poorly. But if you look at the PE ratio, it's still 37. And so maybe valuation was an issue before this year. And yeah, the valuation was probably too high before this year. CPRT a value trap? I wouldn't say that. I would not say that. The valuation is now at a very low part of the historical valuation, and it's undervalued. And also the business, yeah, is certainly affected by the economy. But I think it's still a good quality company. I wouldn't say it's a value trap. Company is financially strong and the profitability is still good. I wouldn't say it's a value trap. When will it go up, start go up? I don't know. But I do own the stock. Okay. Okay, we got quite some questions. Let me talk about something else a little bit. We have been keep adding new features to the website. The new features we have added lately is called transcript search. If you come here, yeah, if you come to this tools, under tools, we have the last one called transcript. Here you can search any terms among all the company transcripts. You can search, I don't know, give me a term you want to search. For example, you want to search good mining. Okay. You just search here. It will give you all the companies that's related to good mining, their transcripts. You can take a look. You can click into it and take a look for the transcripts. It's it's a tool that we developed to make it easier for you to search among all company transcript. Of course, let's search artificial intelligence. Let's search that. Okay, give you everything related to AI. You can search keywords here. We are expanding by keywords. We are expanding it so that you can add things like and all here, so that you can search more different options in this transcript search. And I think that would be useful if you love to read the transcripts. We also expanded gradually to the filings, the different SEC filings of the companies, so that I can search everything just by using the tools we have here. Okay, let me look at other questions. Yeah, that's a transcript search tool we have. Another feature we actually released, it's called bonds. Here, it's for every company, we have a bonds tab here. You can click here and look at the bond, current outstanding bonds for different companies, the amount, the coupon rate, and their ratings, their ratings by the rating companies. This is a new feature, also a new feature we added lately. And we also create a bond screener. We're actually creating a bond screener so that if you're a bond investor, you can search for bonds, different bonds, and that's what we are doing for the new data we're adding. Okay, let me look at more questions. Do S&P 500 have advantage in form index liquidity pouring into that, no matter what the valuation is? Yeah, I think so. The S&P 500 certainly, S&P 500 companies certainly have some advantage once you are entered. The funds, index funds, have to buy them. What would you make? What also NVIDIA? NVIDIA is a company. You're kind of forced to own it because it has been the market leader for a long time. If you don't own it, you certainly underperform. But I feel nervous about it. I do feel nervous about it, and there for any field, of course, it's dominating right now. But for any new field, there will be new players coming into it. Google is getting into the market, and that's why Google stock has been doing so well lately. Nvidia has not been doing well like since last few months. Let's take a look at the performance of Nvidia stocks. This year, it's gained 38%, which is of course very, very good. But if we take a look at Google stock, compare it with Google stock, and Google stock did better this year. Google stock is almost double the return of NVIDIA. So that's especially last 2 months, Google stock has been doing extremely well. Actually, since August, Google stock has been doing extremely well. The market is seeing different players entering the market. Okay, I've noticed Bryn MC Harland. I've noticed that our cash flow posting for some companies that financing activities related to that does not match the actual statement put out. For this kind of, please open a ticket and our data scientist, data analysts will look into them. Please do that. I think our data is accurate, but sometimes there are some misunderstanding there. Chris asking, is it too early to enter CMG? Chipotle, okay. Is it too early to enter Chipotle? Chipotle, of course, has been doing poorly this year, and the reason is actually the market, inflation is a big issue, and the growth is slowing down, and that's. But the valuation is now much more reasonable. That the margin seems to be still stable for the company. That's the margin, the profit margin. Let's actually take a look. Let's take a look at the profit margin. And I come to Interact chart. And if you want to look at the profit margin, I just search by margins. I just search margin here. We can see that there's gross margin, there's pre-tax margin, there's net margin. Okay, EBITDA margin, there are lots of them. And if I remove the stock prices and just look at the margin over the last 5 years, the margins are actually going up if you look at the quarterly margins instead of annual. Last 3 years, or if I look at TTM margin, which is averaged, margin seems like it's quite stable and still on the trend of going up. If you look at a shorter time span, 3 years, and the margin used to expand quite quickly, but now it's not expanding as quickly as before. And that can be a reason why the stock is got punished. But so far, it seems like the margin is stable. That's what we need to be careful with fast-growing companies. Usually, when they are out of favor, when they are losing the growth steam, their profit margin will decline. Let's look at the income, the statement. Here, the operating income, operating margin here, seems to be stable, I would say. We don't observe any problem yet. Okay. Okay, Chris is saying talking about the transcript search. Thank you. Give us feedback on it. And it's a new feature. We just released it, and we're still working on it. Welcome to any suggestions. Sam, is there a way to do top-down analysis? I see valuation for S&P 500 and individual companies to look at company sectors and industries. Yes, Sam. For top-down valuations, please look at the market manual. The market manual here, and there's a global industry overview here. And if you look at the US market, click on USA, it shows you all the performance numbers of different sectors and the valuations of different sectors, and the valuations of different. You can drill down. You can drill down into different sectors and look at the details of industries, which companies are outperforming, which company underperforming. Yeah, and the comparison of different sectors, compare with the SP 500 for different time periods. And I think that's a place to start. The PE ratio, the price book ratio, all the ratios of different all the sectors, and that's where you can get start with a top-down approach. I also showed at the beginning of the presentation, I showed the Schiller P by sectors. You can look at the Schiller P by different sectors. Once, for example, you are interested in energy sector, just click on the 22 here, and it will bring you to the all-in-one screener with all the energy companies listed, and you can filter from there. That's how you can use our tools to do top-down valuations. Okay, I focus. What's our thoughts on future precious metals ETFs and mining stocks? Futures. I actually don't know much about futures, but if you talk about mining stocks and gold, like gold and silver, I think I do own gold ETF. I think I shared it before, and it has been doing really well. But I'm not selling it. The reason is because, of course, you need to pay lots of tax once you sell. Second is that I worry very much about the U.S. government debt. I worry so much about it, and the government does not care about it. No matter who is a president, which party is in power, they don't care about it. The current debt is now, I think, $38 trillion, and it's growing so fast. It's annual deficit. We're talking about 3 trillion, 4 trillion a year. It's just unsustainable, and I worry very much about it, and so that's why I own gold. I will not sell it. It's just I act as a insurance to my portfolio, and so gold mining stocks. Yeah, if gold does well, good mining stocks will do even better. They're more like a leveraged ETF. But of course, if gold price declines, the mining stocks will decline even more. Okay, Brainstorm's asking, does ASML have the widest moat in semiconductor industry? Yeah, let's take a look. We do have a moat score here. If you're not familiar with it, we have a moat score. It says moat score of 9 here, which is among the highest company with the highest moat. If you want to find out which company has the highest moat score, you come to the all-in-one screener and just search for moat here. Yeah, moat score. Yeah, then you can filter with moat score. And this actually is quite accurate. You can find all the companies with the highest moat. Okay, if I sort it, the company actually with the moat of 10 is only Berkshire Hathaway. Everyone else has a lower moat. If you want to know the industries with the highest, certain industry with the highest moat score, so I come to filter industry, search by industry. Actually, I only got 3 companies with a moat score of 9, which is Taiwan Semiconductors and ASML, ASML, and NVIDIA. Which actually, I think I agree. I totally agree. If I relax a little bit, moat score of 8, I got a lot more companies, and got Broadcom, got Intel, got Applied Materials, got everything, got everyone else in the semiconductor company almost. But These three, the Taiwan Semiconductor, TSM, ASML, and NVIDIA, they have the highest mode score. So among them, which one is higher? Hard to see, but they do have very high mode scores. Okay. Scott is saying that unable to add Canadian ETFs. Yeah, we actually we're not covering entirely about the Canadian ETFs, but for any specific ETFs, please open a ticket for that. We should be able to add them. Okay. Antonio, I love using GuruFocus. Thank you. Is there a way to see European stock held by big gurus, although what's yeah, we actually for the European stocks we don't have lots of coverage among the gurus. We do have some gurus that cover that own European stocks, but we don't have lots of them. If we look at the guru portfolios, we do have some gurus that include European stocks in their filings, but most of them are not. They don't include it. Even Warren Buffett filing, we don't include his European stocks. Yeah, there's European market is much more complex. The reasons, of course, we know it. It's much more different. So many small markets, and it's so different filings, different filing formats, different data. It becomes much harder. But for example, David Harrell, we do have this guru, and all his European stocks are here. If I click on one of them, which we have a guru trades here, which should include anyone who owns the stock. Yeah, and yeah, see if you please, same way as you access the US stocks. Once you enter the ticker, it come to Guru Trades here. And in the case of this company, I'm not sure what company. We have only two. Well, actually, if I expand it to plus, let's see. Please, with GuruFocus Premium Plus membership, you can see all the funds that owns a specific stock. In the case of this company, it's called Dassault System. It's a French company, seems like, and you can see all the funds that own it. So, and let's try another company. Let's try another company here. This is London, seems like a Swiss nephew. This is a British company, and if we come to Guru Trades, yeah, you can. If I change to Premium Plus here, you can see that you can see all the funds that own the different stocks. So we do cover that. Mostly they're tracked in different funds instead of the gurus, because gurus filings are mostly 13F. They're not required to include non-US stocks, but all the funds, they are required to include all the US stock, non-US stocks. So here you can find out that. Okay. I hope I answered your question, Antonio. Okay, brainstorming is talking real estate developers too cyclical to be good. Yeah. Real estate is certainly is very cyclical because it's heavy capital investment, and for any industry that requires heavy big capital investments, they're cyclical. It's just the nature. Okay. When Japanese stocks be fixed? Actually, I talked with our data analyst. They said that it has been very hard to do it. For Japanese stocks, there are different individual situations, and I asked them several times about this. They're trying to fix it. They're fixing it, but it has been very, very hard as different companies are behaving. The data is very, very different, and I will certainly talk to them again about this. Okay, Geico is asking, are we considering adding KPI number to financial? Yeah, we actually we created some AI tools to gain the KPI data for different companies, and we have quite some success. And the numbers are not there yet. We haven't released it yet. Actually, I will ask them. I will ask our developers and data people how it's going now. Okay, Tony, when considering a company as an industry disruptor, can you combine mode score with other data highlight entity as a market disruptor? That's a question a little bit hard to answer. Usually, an industry disruptor, it's usually a new company. When it's a new company, the mode is much harder to mirror. If you can give me an example, I can take a look. Okay, Sandy is asking, can transcripts be exported to a PDF file? I think we should be able to add that. Please create a support ticket for that. We should be able to do that. We should be. Let me write it down. Actually, anyways, let me write it down. And PDF file for transcripts, so that people can print. Canadian ETFs, and also Japanese stocks. All this I need to follow up our data and the developers about. Okay, Brainstorming is asking, can you elaborate why people buy a stock with weighted average cost of capital greater than return on invested capital? Yeah, it's for any companies, when they invest something, the investment only become profitable if they have higher WACC than ROIC. So in this way, if a company's weighted average cost of capital, okay, actually opposite. The weighted average cost of capital needs to be lower than the return on invested capital. Because if your cost of capital is higher and your return on capital is lower, that means your investment is generating negative returns, and your shareholder equity will decline. So you want to invest in companies that have higher return on invested capital than weighted average cost of capital. So that brainstorm, you have that in opposite. You need to make sure that the cost of capital is lower. And we do have it here, for example, ASML again, and the weighted average cost of capital versus return on invested capital. The cost of capital is lower than the return on invested capital. We have a chart here also. We have a chart here. Yeah, here. So this chart, the green bars are the return on invested capital, and the red bar here is a weighted average cost of capital, and the black lines is a difference between them. The difference. So you want to make sure the black line is above zero. So can see this company ASML. It's a great company. That's why it has a higher return on invested capital on weighted average cost of capital. And let's look at another company. I just randomly look at another number. And in case of Chipotle, yeah, the weighted average cost of capital is is more consistent, and the return on invested capital is increasing. So that's actually a good sign. That's a good sign. That's an annual number. We can look at the quarterly number. Look at the quarterly number here. Yeah, the companies always have higher return on invested capital than the cost of capital. Only by doing this, a company can grow its equity, shareholders' equity, and have positive returns. And okay, another company just call parts. We look at the same chart here. Which, yeah, the company also have much higher return invested capital than the cost of capital. So that's why the shareholder equity, it has been growing. Yeah, that's what I think we need to do. Okay, what does system show Tesla value? Okay, let's say Tesla. Tesla certainly is a very high-profile stock. It's a story stock. This year, okay, it's up 17%, which is not bad at all. But the stock has always been volatile. The stock, look at the historical last 5 years, and has always been volatile. And if you bought at the peak in 2021, your return to today is not that good. But if you bought at bottom 2022, your return is great. That's been always volatile. And again, let's look at return on invested capital versus cost of capital. And Tesla used to have always had a negative return on invested capital. Then it turned profitable and have positive returns. But today, the return on invested capital is still below the cost of capital. So that's why the black line is negative. It was positive for just 1 year and then become negative again. So that's the reality of Tesla. The profitability hasn't been good. The growth has been flat for the last 2 years. And of course, there are lots of expectations on it, on the company. And I don't own the stock just to disclaim that I don't own stock. I don't like companies that have this much of uncertainty and unpredictable revenue and profitability. That's not for me. Of course, Elon Musk is a great CEO, a great businessman, and maybe you should buy the stock just because of that. I don't know, but some people do, but it's not for me. Okay, let me look at the question, a brainstorm question again. Ideally, ROIC needs to be higher than cost of capital, but some investors still buy that. And are they looking at some other more important indicators? Yeah, there might be. For a fast-growing company, before it turns profitable, they may have higher cost of capital than the return on invested capital. But if they keep growing, and turns profitable over time, the stock can be very rewarding. Some people might be looking at that. It's just an example. Generally speaking, are banks good or bad investment? Hard to answer. Charlie Munger, I remember Charlie Munger said that banks are black boxes, and especially during the financial crisis, even Warren Buffett was burned by the banks. If you look at the historical returns, of Warren Buffett's holdings, which one is the most is the worst investment Warren Buffett made, actually. The best ones, of course, we know Geico, Coca-Cola, American Express, in recent years, Apple. And actually, Wells Fargo was the worst investment Warren Buffett ever made. And he bought it in 1990s and they hold it for many, many years. And then Wells Fargo has that scandal. Warren Buffett, Wells Fargo was opening an account for people without letting them know. So Wells Fargo's fund was limited, restricted by the SEC. Stock went down a lot. Let's take a look. Wells Fargo stock went down. I think more than 50% in 2019. Actually, went to the bottom. And Warren Buffett sold the stock in 2019. So if we look at a longer term, Warren Buffett bought Wells Fargo 1990s, actually, about 1990s here. And he sold it in about 2019 here. And so he owned it for like 20 years. He didn't make money out of it. And it used to be his number one holding for quite some years, Wells Fargo. So are banks good investment or bad investment? Even Warren Buffett doesn't understand the banks he owns that well. And so for us small investors, it's even harder. But it doesn't mean it's a bad investment. I just say it's a black box, and it's hard to understand. Some small banks, and Peter Lynch mentioned this in his books. Some community credit unions, some mutual banks. They're usually small and very transparent and business simple. They can be good investment. And I used to many years ago, not recent years, not that much anymore. But yeah, if you are interested, you can read Peter Lynch's books about mutual banks. Okay, that's some history here, some story. I'm getting old, so I know lots of older stories. Okay, let's take a look at the paychecks. I do own the stock. Yeah, paychecks as I think the company has good quality. I think the business is very predictable. Yeah, but again, like lots of financial companies, they're out of favor. They're out of favor. They're actually they're not related to AI. But the business has good returns. The growth has been steady. The valuations is quite reasonable. So that's where we are. If I were looking for stock with potential to become 100 baggers, which criteria and metrics should I focus on when using GuruFocus? If you're looking for companies that are 100 baggers, you need to look at fast-growing companies, very fast-growing companies, and of course the risk is there. If the fast-growing companies cannot grow anymore, the market will punish it dramatically. There are lots of risk. So pay attention to the balance sheet, pay attention to the growth trend. Yeah, but you need to look at the companies with fast growth. It's yeah, getting 100 bagger is everyone's dream. It's everyone's dream, but it's hard. It's hard. I heard Chalk Actor once said that if a professional money manager can get 100 bagger in his lifetime, that's already a success. So for professionals, one in a lifetime is a success. And for individual investors, yeah, it's really lots of time it's luck. Okay, can we look at applied materials? Okay, I'll take a look at applied materials. And yeah, now semiconductor stocks has been doing well. Applied material has been doing well this year, 62%. And the most score 8, not as good as NVIDIA or TSM or yeah, the market is the stock is certainly much more cyclical than others, than NVIDIA or than TSM. The growth is not that fast. If you look at, let's look at the forecast. The growth as a semiconductor company, it's only growing single digits. So if we compare with example, ASML, ASML is the forecast growth is double digits, okay, 10%, 17%. So growth much higher. And also let's take a look at TSM. NVIDIA grows, of course, very fast. But let's take a look at TSM. Okay, even higher growth. So applied material has lower growth than others. So you probably want to look at other higher growth companies if for this kind of industry. I think Richard asking, is there somewhere to find Warren Buffett style owners earnings owner? Yeah, we do have owners earnings for every stock. If you come to our summary page, if you search owners, yeah, owners owner. We have a ratio called price to owner earnings, and if we click on that, it will show you the how the owner's earnings are calculated in detail. Yeah, I hope that yeah, I recommend you give it a try. Give it a try. Okay, Adam's asking, align with Dr. Yandani's Rowing to 2020s. I'm not familiar with his theory. I read a little bit about his stuff, but I'm not familiar with his theory. Rowing, yeah, there used to be, I remember that when I was younger, there was a book called Rowing 2000s. It was it's written by Harry Dent, talking about the population. So the market would do really well in year 2000s. And of course, then we had two crashes in year 2000. One is 2001, the other 2008. I don't want to predict that way. Oh, 2020 will be great. I don't want to predict. I think the market it depends a lot on market valuations over time. Currently, market valuation is high, so the future returns will be relatively low. So that's what the market is positioned for, and which I think I agree. Okay. Brainstorming is when everyone says it's a bubble, when it's not. I don't know. Yeah, maybe Antonio asking, what do I think about UMG? Let's take a look. UMG stock. UMG, Universal Music Media, Universal Media. So it's a European company, and yeah, the GF score seems to be good. It's not the best, but it seems to be good. Oh, same relatively new company, profitable, growing not that fast, and the profitability seems not that stable. not that predictable. The profitability can be random, but valuation is low. Valuation is low. Valuation seems to be attractive. Okay. Sandy is asking, what is an earnings without NRI? Earning without NRI means NRI means non-recurring item, so it will not recur again. Means that it does not include the parts contribution from discontinued operations or from one-time gain or loss from earning from that. And if you don't understand what it means, you can always come to our definition page, and our definition page has all the definitions which will explain to you, which explain the earning without ANRI. If you come here, it will explain what that is in the exact meaning of it. Okay, hospital chains companies are generally good or bad? Not sure. I think we need to look at specific companies. Competition is quite fierce, and lots of them are losing money. I always want to buy companies that can consistently make money and also have strong financial strengths. Okay. Cloudflare. Let's take a look. We do use Cloudflare, and they had crashed last 2 weeks ago, and even our website was affected. Also, half of the internet was affected. Apparently, their stocks were punished by that. And yeah, I think the company the business is very important to the internet. Even lots of big companies are using it, big or small. We're using their service too. GuruFocus website are using a Cloudflare service as well. But as a business, it's not profitable yet. The stock has doing pretty well last few years. I think the reason might be the market seeing that the companies gradually start to make money, and cash flow is now at least positive. The EBITDA is now is positive. The cash flow. Let's look at the free cash flow is, free cash flow is positive. So, but it's a new company, and there's risk there, but can be rewarding too. That's I used to during the pandemic went up a lot. Then it kind of come back to reality. The company is still at a loss, not making money. The price to sales ratio 35. That's high. The price to sales ratio is 35. So the stock is sold at 35 times of the sales. That's really high. It's only justified if companies can double or triple every quarter. But it's not the case. The revenue is growing about 20-something%, which is high, but I don't feel it's the valuation is justified for that kind of growth. Okay, Chris asking when company GF value is lowered. Jeff, your top property. Okay, headings. Are you personally looking for a change in its momentum as an entry point? I don't look at that very much, but yeah, I think something to consider. I think. Okay. I'm not sure how to pronounce this. But what state U.S. economy is currently in? I heard an opinion that Fed cuts the rates mainly to avoid recession. Where are we with the U.S. economy? the economy is certainly not as hot as it was 2 years ago or last year. And the job market is tight. I heard lots of layoffs, different companies layoffs. Yeah, and the market is high. That's where we are, but I wouldn't know how the market will do next year. I wish I knew. Okay. Okay, Brainstorm is talking about SADA's 2270. Let's take a look. Okay, this one. Not sure which company you're talking about. SADA. Not sure which company you're talking about. Okay. How can we analyze stock MDB, MongoDB using GuruFocus features? Okay. Stock high valuation, but also great financial. In other words, is there any metric ratio to track valuation versus potential? Okay, and MongoDB. We actually use MongoDB too in with GuruFocus website. We do use that, and stock is kind of cyclical over last 5 years. And so where are we? The company is still losing money, but the loss seems to be becoming less, and cash flow was positive. Cash flow was positive last 2 years. Let's look at quarterly data. Company is at the verge of making money, has been losing money, and the cash flow seems to be good. Company has lots of cash and no debt, so seems to be okay. The risk is okay. The price to sell for this kind of companies that are in loss, the best valuation fact is probably the price to sales ratio. The price to sales ratio is 14, which is not as high as Cloudflare, but it's also quite high. Again, we will require a higher growth rate for this kind of company. Growth is 17%, future growth is 17% forecasted, which is not that high, I would say. And the valuation to me is too high at this point. That's what I think. Is there a way to follow my own personal portfolio on GuruFocus studies? It's I will. I think I own lots of stocks. I talk about. I only buy companies that has good predictability, good profitability, and good financial strength. And I personally created this screener. It's called high quality, low capex screener. And all these high quality screeners I created, and I choose I invest lots of them. Actually, lots of companies from this list. Okay, seems like we are running out of time. Okay, let's take a last one, the 2270. Okay, Saudi company. That's this one. Saudi dairy. Possible value trap. Okay, the value trap. I think the change. If we look at why we think the company might be value traps, mainly this Pejoski F-score, and it's 3. If we click on that Pejoski F-score, 1-3 means that a lot of things are getting worse. If you go through the list, it's actually answer 9 questions to see which ones are getting better, which ones getting different, like margins getting better, revenues growth, things like that. And in the case of this company, it seems like the indicators are getting worse. For the first one, return on assets. Okay, seems getting better. Cash flow return on assets. Okay, getting better. And the change in return assets, okay, it's actually not. And quality of earnings is not good. Funding, change in earnings or leverage, it's actually not getting worse. Last year is lower than. So we use all these indicators to check. It's like a checklist to check how things are going with the company. In the case of this company, only 3 aspects are getting better, and other 6 are getting worse. So that's why we think that things are not going well with the company. So there's risk in it, and you need to understand that. That's why we warn you it can be a possible value trap, and you need to be careful. It does not mean that you cannot invest in the company, but you need to know what's going on with the company and check all these warning factors like Pajowski F score and Altman Z score, which is safe, and check all this. That may help you to reduce number of mistakes. I hope that session helpful, and thank you for all for coming. And our next meeting will be always at Wednesday, first month of Wednesdays will be January 7th. It will be January 7th, and I will see you in a month. And before that, I wish everyone a Merry Christmas, a Happy Holiday, and Happy New Year, and good luck investing with Happy New Year. Thank you all for coming again, and see you on January 7th.